And we are live. Hey guys, welcome to Crypto Talk Now live with Larry. So grateful that you have joined us. If you are here for the coverage of the live Jerome Powell speech, which is going to be at the top of the hour, expected to be at 2 p.m. Eastern Standard Time. It is currently 1:49 p.m. Eastern Standard Time, and we will bring that to you live. Looks like it's been pushed back to 2:30 p.m., but we will be bringing you commentary. We will give you our reaction as to what is going on. This is a pop-up stream because this is an important day. The old man has rolled out of his cave, perhaps to see his shadow or not see his shadow, or to maybe raise interest rates. I don't know, one of those things, or both. Let's say hello to our beautiful audience. Will the old man see his shadow? That is the question. Nahali, the Mississippi Moro, salute. And I salute you as well, my friend. Appreciate you being here. I've got the gratitude rock in case you don't believe me. Very grateful that you are here. So much to talk about ahead of this press conference, which is scheduled for 2:30 p.m. Eastern Standard Time. They fooled me because I thought it was supposed to be 2 p.m., but apparently they had a little trouble getting him out of the cave or something like that. I'm sure that it's something similar. Make them, take them, mock them, talk them. What's up, Larry? What is up to you? Glad that you are here. Let's take a look at the overall markets while we're waiting for Mr. Powell. You are looking at the top 100. You know, there's a lot of green in here. It's not too bad. Not too bad, baby. We've already anticipated what's going to happen. I'm anticipating it to be 75 basis points, as are most people. I think there's an outside chance it could be 100, but the general feeling is that it would cause shock and awe to the system. That being the economy. The macro economy would not do well, apparently, if it just gets raised by another 25 basis points, which is really ridiculous. I think it's more of like a psychological thing. But the overall crypto market is currently at $934.31 billion, up 1%. Now, stop what we're doing and say hello again to Make Them Take Them. He says, Larry, it was nice meeting you yesterday. Yes, it was. I was just actually thinking the same thing. We met in person on the Discord. I don't have the links in here. I'm a little bit disorganized, but I need to start putting the links to Discord and our other sister stations here. But yeah, it was nice to meet you as well. Bitcoin currently sitting at doing well on the day, up 3.39%. So perhaps the Powell speech has already been factored in. Or not. We'll see. 19,000. Let's see what happens when he announces the interest rate hike. 19,000. Excuse me. $509. Ethereum, 1372. BNB, 269. XRP, you know me, 39.6 cents. Cardano, does anyone care? Solana, $32.14. Doge, moving up slightly. $5. I'm sorry, $5. 5.9 cents. Polkadot, $6.37. Polygon, 74.5 cents. Shiba Inu, where are you? 401076. If anybody else says Shiba Inu, where are you? Then you know that they copied us. Avalanche, 1717. Uniswap, $5.48. Cosmos Atom, $14.37. Ethereum Classic, notable mention, $29.43. XXI Gaming Gammon, he said this fire. Glad that you could join us on this pop-up stream. We normally don't stream at 1:45 Eastern Standard Time, but we are doing this because the old man coming out of the cave. And we say that affectionately. I'm sure he's not going to come on the show, but that's okay because we're going to watch him anyway. We're going to be scheduled to watch at 2:30. I'll give you my reaction. We're going to find out if he sees a shadow, raises interest rates, or all of the above, or maybe he won't see a shadow and maybe he won't raise interest rates. We'll find out. XXI Gaming Gammon. 1 full point. Remember, I told you, Larry. I tell you what, I'm ready. Bring it on. I got to just check my iPad real quick. I'm ready for the doom and gloom. I'm ready. I have my pitchfork ready. It's actually out in my yard, but I can use it to perhaps follow the crypto market to the gates of hell. We don't have to go through the gates, but we can actually follow it for some bargain basement type prices. just a quick check on my iPad. It's not my phone. It's something that I'm working on here. Okay, I do see where we're at the moment. All right. So, Bitcoin BMW, howdy. What's good, Larry? He's in Texas. Perhaps he's wearing his cowboy boots today. He has a fine racing machine. It's German engineering at its finest, besides Porsche. Bitcoin BMW is here. He also likes Bitcoin. Hello, everyone, and howdy. No, he says howdy. How about that? So there you go. This is what we're waiting for. Let's go and see. And while we're waiting for Powell to come out at 2:30, we do want to talk to you about some other news. So let me just go and take a look quickly at Yahoo Finance and see what's going on in the traditional equities markets. Is it a surprise or not? Apparently, what I've been saying is right, that the hedge fund guys, the big guys on Wall Street have already factored this in. But you want to know something? If he comes out and says 100 basis points, he might see a shadow and we might be in trouble. So that's what could happen. Now, it says right here, they're expected to raise it by 75 basis points for the third time in a row. We talked to you about this today. Quick look at the equity markets for a heck of it. The S&P 500 up slightly, up 24.7 points. Dow Jones Industrial Average up 143.05 points. NASDAQ up 73.41. Russell 2000, does anyone care? 12.71. Crude oil down slightly, coming in at $83.75. It's a quick look at oil and the equities, at least in the U.S. Now, more news while we wait for the old man. Hopefully he's not delayed because I'm going to get bored, but we can keep you entertained nevertheless. All right, so let me just see if I can find the one that I wanted to show you guys. Okay, almost there, almost there. I just don't want to miss it because I'm scaling down. Let's see. Now, this one right here, I'm going to read you this one. The USDC listed as the first stablecoin on Robinhood. I'm going to tell you why this is important, and I'm going to give you my theory as to why it was listed on Robinhood. Before we do that, joy to the world. Hey, y'all, joy has come. She's here to spread joy. Perhaps she says, hello, Larry, and hey, how are you, Joy? Glad that you're here. Appreciate that sincerely. You are here for this pop-up stream. By the way, if you guys don't know, or you ladies don't know, we have a new show. It's called Steak and Crypto because I like to eat steak before my workouts. I'm actually in a bulking stage. My son is going to be an amateur bodybuilder, and so I'm kind of following in his footsteps. He's kind of like, an 18-year-old version of me, but stronger. So I'm going to be bulking. He's helping me with my meal plan and everything. So I like to eat steak, and he's telling me I need to add rice because I need more more carbs. I was like, well, I cut the carbs out. He's like, nope. If you're going to bulk, you need to have carbs. You're not cutting right now. All right, then fine. But what am I saying? Every single day, Steak and Crypto, every morning is on 8:15 Eastern Standard Time. We give you news very compressed. We actually talk about crypto, a little bit about basketball and other things, life and stuff. And then if my Uncle Ricky comes in, then we just go right back laser focused to crypto because he gets upset. But actually, he's been in a good mood the last day and a half. So that's good. Now, also tonight is Wednesdays with Max. Every night we have a show, 9 p.m. Eastern Standard Time. I might start doing the 3 o'clock show again. I'm not sure. Mentalect, welcome back. He's here. UI. Joy says, awesome. XXI Gaming Gammon. What's good, everyone? Larry, soon as everything tanks, I'm buying for the next 6 weeks. So he's kind of like thinking like me. Everyone keeps teasing me. They keep telling me, Larry, you need to buy something. Well, sometimes, I have tremendous patience. And I don't want to do anything prematurely. Premature anything is not good. You can just ask people. It's not good to, jump the gun. So I'm waiting. But, you could make the argument that I should have dollar cost averaged into XRP, but I was just being stubborn. The only thing that I purchased was MetaMonkey in recent times. MetaMonkey, and prior to that was Voyager. So I haven't purchased hardly anything in the last 3 months. But This is what I want to tell you. I don't know if they're going to say this or not. They probably are not going to do it. I don't even have to read the article to tell you the significance behind this. I believe that Robinhood is now in bed with the government. I think that they've been compromised. Why do I say that? Because they were really highly scrutinized and they took forever to list Shiba Inu, right? It was kind of like Shiba Inu, where are you? They couldn't find it on there. They wouldn't list it because they were scared. They were running scared. You know what? There's 20 beautiful people in here. Don't worry. We're going to show you the old man coming out of the cave, but it's not coming for a while. 30 more minutes. You got 31 minutes. Unless he's late. USDC listed as the first stablecoin. Now, this is significant because they've been compromised. Robinhood is working closely with the government. This is just my opinion. And what else is in the news? They're going after the stablecoins hard. Who told you that we'd do that? Maybe some other people did. I'm not surprised if they did, but I also told you that. They're going after the stablecoins, and Terra Luna Classic is Terra, the original Terra. It's now known as Luna Classic. Is the poster child for unstable stablecoins, right? That's why they're going after them, and they're glad that it happened. But I believe that the government had a hand in it. It's just me. Now the government has a hand in this. So the banks, what's going to happen now? All right, let me blow this up because you need to see me. The banks and the credit unions are now going to be parlayed into allowing themselves to be offering a new host of products. And those products are stable coins. And guess what? It's not your grandfather's stable coin. It's not your mom's, your dad's, your sister's, your brother's. It's not really a stable coin. It's a stable coin that doesn't pay much of anything. That's my opinion. It's going to give you 1, 2, 3% at the most. No more 10, 12% stable coins. Kiss it goodbye. And they're going to temporarily suspend some of the stable coins for 2 years. And they're going to give you time to fix your contracts and show evidence of reserves. That's all coming. So why is this? Because the banking lobby is the most powerful. Don't listen to anybody else say this. They're the most powerful lobby in the U.S. They just are. That's it. So they have to have a piece of the pie. And they want to destroy stablecoins as we know them to be able to get that piece all to themselves. They want the whole pie. Robinhood has, and this is actually courtesy of coinmarketcap.com. They wrote it themselves. Now, Crypto Daily. All right. Robinhood has announced that it has listed the market's second largest stablecoin. You want to know why they did that? Because right now the government is going after US what? They're going after this one over here. Number 3. They're going after Tether, USDT, right? So now, why all of a sudden are they listing USDC? Because they're not going after them right now for some reason. Maybe they're complying behind the scenes. Isn't that interesting? Why wouldn't they just list Tether? That's what I'm saying. Something weird's going on here. I know you guys are thinking I'm nuts, but it's true. I am nuts. But I know what I'm talking about. Robinhood's first stablecoin. Earlier today, Robinhood announced that it had adopted the first stablecoin into its trading platform, USD Coin. USDC is the ticker symbol if you're keeping score at home. As a result, Robinhood users will be able to trade the stablecoin or hold on it. What? Or hold on to it. All right. On the aforementioned trading platform. Why don't you just say on Robinhood? Why do I have to use the word aforementioned? Robinhood is quite popular as a brokerage app, allowing investors to dabble in both stocks and crypto. The trading platform started operating in 2018 and has since amassed 17 other cryptocurrencies. However, USDC will be the first stablecoin to be added to the Robinhood roster. Refocusing the business model, the move to include a stablecoin in their listings indicates that we've got to go over here to read the full article. Let's see. Let's see. You can't even find out where you left off. You know what? It doesn't even matter. All right. You know what? I don't even care. That's enough. That's all we need to know. Thank you so much. Goodbye. All right. So we don't need this anymore because I can't even find it. It doesn't matter. That's all I wanted to read. That's good enough. Because my point was something that wasn't even pointed out in the article, which is this: Robinhood is secretively making deals behind the scenes with the government. I'm sure of it. And they're also, this is not a coincidence, they're going after Tether. So Robinhood is being the good little boy, and they want to conform with what mommy and daddy are telling them, which is the government. Government is telling them, you don't put Tether on there, you put USDC on there. And that's why, because they must be playing by the rules. Something is like that. I got the wrong coffee mug. This one's got coffee in it. So we are going to get to Powell's speech when he comes on. And if you don't believe me, I'll show you right here. Here it is right here. We're just waiting. Let's see. It's probably just music right now. Yep. They got some romantic music playing. I'm not sure why. It's kind of romantic, but it doesn't make sense. So make them take them. Larry, keep in mind your son is 18. His body is younger and can handle carbs. Be careful with your diet. I know. That's what I'm saying to him. It doesn't seem proper. He's telling me, and then my girlfriend said the same thing and backed him up. That's what's weird. She's telling me, Larry, if you keep, he's telling me I'm going to destroy my muscles. I'm going to start eating away my muscle because I need fuel. Well, first of all, it seemed kind of radical. I had 80 grams. I had 2 scoops of the protein powder. It's 40 for the first time yesterday in years. I don't drink protein powder. I drink protein shakes and stuff, but that's not the same. So this was whey protein. I made it myself. 80 grams. So he's telling me I'm 190 pounds. He weighed me. He brought a scale over. Now, so I'm thicker than he is, and I'm going to bulk up because I told him my goal is to get to 205 because I want to be considered a heavyweight, even though I'm not going to fight anymore as an amateur boxer. But I just want to say that I don't know if this is proper. I don't know if I should be eating carbs or what. I know that the women, a lot of them that do dieting to, have their bikini bodies, they don't eat carbs. They don't eat bread and stuff. But he's saying to me, Dad, you're going to be bulking up. You're going to be lifting heavy weight. You're going to need fuel because if you just eat steak and stuff like that, that's going to give you the protein. But the carbs is going to be the fuel that you need to burn. And you don't have to worry about, you are going to gain some weight, but you need mass moves mass. He's saying this type of stuff. So I'm not sure. I have to research it more. I'm actually on the fence about it. But yes, I had to be careful with my diet. They tell me, and even my son said it, 80% of 80% of bodybuilding is diet. That's what's crazy about it. Can you believe that? So if you really can fix the problems in the kitchen, and he's telling me about, meal prep, he's saying chicken, rice, and broccoli is like one of the best things I could have. But, I need to have some variety. I have to have my steaks in there. You can have steak. But he's got to, I have to sit down and really study this. It's a science, because I'm really serious about it. I for the first time in my life, because when I was 18, when I was his age, I played football. I had a devastating neck injury. Now, this is a true story. I, all my life, played baseball and basketball. I had never played football before, but I have a football player's mentality when it comes to sports, meaning that I'm really aggressive and I like to hit people. So, for the first time for 1 year, I decided to play football, and that was my senior year. And I really did it just to impress girls, to be honest with you. I wanted a jersey and stuff like that. And I wanted the accolades, and we had a really good team. And I was a strong safety. I just naturally fit in, and I worked my ass off because I wanted to show that a baseball player could play football, and a basketball player, whatever. Mainly my sport was baseball, but I, wanted to show them. Now, my strength and conditioning coach, whatever they called him back then, he got mad at me. He's like, Larry, you don't work out. You don't lift weights. I said, look, coach, I do 500 push-ups a day and I do 1,000 sit-ups a day. because I went to a military high school. I was really disciplined. I'm really disciplined about it, coach. I know you want me to lift weights, but I'm not really into it. And guess what? I do a lot of natural stuff. Like I bale hay. And he's just looking at me like I'm strange. He's like, you need to squat. You need to work on your legs. I'm like, I run. And I also do cross country. And that's what I remember the cross-country coach saying to me. He said, eat a lot of pasta the night before. Make sure your mom cooks you pasta because you're Italian. Eat pasta because that's going to give you the stored carbs that you need for energy. So my son might be right. Well, I had a very fast metabolism back then. I was 152 pounds soaking wet in high school. Can you believe that? My son is like me now. He's wiry and strong. He tries to tell me that he can bench press. He's the strongest, he said, in his class. And he said, it's sad, Dad, because a lot of kids they don't go to the gym. He said that they just, play video games and they don't work out. And I was like, well, you have an opportunity to, to be the man. You have an opportunity to be respected and get, your other friends into lifting. And maybe you should start a YouTube channel. You could be like the next Scott Herman. He's been doing it for 12 years or something like that, and made, millions of dollars from it, and now crossed over to crypto. So I showed him that. He's like, oh, I've seen him before. I'm like, well, he was on my show. You could watch him. He's a good example for you to follow. So he's going to check him out, but he watches some other young guys. He watches these guys that are like 21, 22 years old, younger guys. So that's that. I don't know how I got talking about bodybuilding. All right. LeGron Commission. What's up, Larry? Hi, everyone. Hey, welcome back, LeGron. It was good talking to you last night on Discord. Selma Fudd, Crypto Talk Now. He's back. Desert Storm Army veteran. Selma Fudd. Hey, Larry, how about my Cleveland Indians? I crossed out the word Guardians and just said Indians. Are they doing good? I haven't been following it, to be honest with you. I haven't been following much baseball. I do know that Aaron Judge just, I think yesterday, hit home run number 60, so he's tied with the immortal Babe Ruth. Now, what's the Cleveland Indians? We'll call them the Guardians. What's their record? Let us peruse Google. All right, wow, they're in first place. How about that? They have a home record of 40-32, away 41-35. Overall record, how about that? How about those Guardians? 81-67. Well, next year I might actually go to Cleveland because my friend, he's like a brother. He's older. He's in his 60s. Everybody's my brother because once they become friends, it's like their family. He just moved not far from, he used to live down the road because and he just moved back to Ohio. Literally, he just left. He got his payment for his house yesterday that he sold here, and he just left and went to go live with his wife and daughter. So I might go and visit him. He invited me to go to Ohio. I've never been to Ohio before. So I might go there and watch a Guardians game. So it'd be interesting. All right. So that's that. Yeah, they're doing good. How about that? And good for them. You know what? Cleveland is an amazing sports. It's a sports city. It's a sports town. Oh, it's bigger than a town, but you know what I mean? Cleveland is big. They're loyal to their teams. The Indians. See, I said the Indians, the Browns, right? But the sad thing is they just never win in the playoffs, right? I mean, it's sad. But just because you don't win the World Series or the Super Bowl doesn't mean they don't have outstanding fans, very loyal, dedicated fans that enjoy, sports. So I like that. It's my kind of town. I mean, I would fit in there. I would go and watch a Cleveland Indian game or Guardians, whatever they call themselves. All right. Whatever the people in San Francisco want them to be called. Let's just be honest. All right. So that's it. So now back to crypto and this crazy old man. I will just see to make sure they didn't come on early. Well, that's it about the Cleveland Guardians. Let's just see if they have the romantic elevator music on. Yeah, they do. Puts you sort of in a romantic mood. So I'm not sure what they're doing. I mean, I honestly don't know why they would play that type of music. I really, really, truly don't. It's just a bizarre, very bizarre thing to me. So, this is where we stand. So we've looked at the overall market. We've looked at crypto bubbles. We're waiting on Powell to come out. He might see a shadow or something like that. Or he might just give us an update on interest rates. There are other things that I want to discuss while we're waiting. I thought he was coming on it too. Hey, somebody's here. Crypto Bugs. What's up, Tall? Hey, how about that? Somebody new. Can we please stop and recognize, put your hands together, wave them in the air like you just don't care, all that kind of stuff. Good, positive vibes to Crypto Bugs. Appreciate you being here. And if you don't believe me, I have a rock that says gratitude on it, and that's what it's for. Now, the trick is to figure out what his NFT is. It could be perhaps, is it a Banana Task Force ape? Is it a GGG one? I don't know. He says, what's up, y'all? As if he was from down south. He could perhaps be from the south. Glad that you're here. Every day, 8:15 in the morning, steak and crypto. Eastern Standard Time, because it's the only time zone that matters. Translate it to yours. 9 p.m. Eastern Standard Time is the big show, the Max and Larry show. Tonight, it's just Max. And we have pop-up streams like this one here. And we're going to go back to doing the 3 o'clock show soon. So that's what's going on. Now, the news courtesy of who? If we can pull them up on the screen, CoinGecko, back with a vengeance to take on CoinMarketCap, perhaps, and in a battle to death to see who has the best news and prices, more accurate. I don't know. Probably CoinGecko. Now, this is something interesting. Even though I don't really care about government things, Colorado now accepts cryptocurrencies for tax payments. Oh, that's progress. So, they're finding out more ways to collect your money. Colorado has become, and this is courtesy of cryptodaily.co.uk. Can you believe that? It's a story out of the UK about Colorado in the US. Has become the first state in the US to accept cryptocurrencies for payment of taxes. The news was announced by Governor Jerome Powell on Monday and has already been made available on the Department of Revenue's website. Residents of Colorado are now able to pay their taxes through the PayPal cryptocurrency hub with service fees of $1 and an additional 1.83%. Oh, that's where they get you. Of the PayPal. Why even bother? This is what pisses me off. Now I'm getting pissed off about PayPal. Now they just ruined my whole day. Why do we need to even charge you $1? They're getting 1.83%. What's the point? Why do we need to even charge you $1? Why do they do that? So they can go buy a soda? It doesn't even make any sense. It's really stupid. It's asinine. Don't charge us $1. Just put the percentage in there. We already know that's where you make your money. The dollar is just so trivial. Of the payment amount, I just really don't like PayPal. I'm sorry. For now, I got a big payment for a customer last year when I was still doing the business, a client. It was a deposit. It came through PayPal. They wanted to hold it for 5 days because I hadn't used PayPal in so long. I said no. I refunded it back to him. I said, just send it to me through Cash App because he was a digital type of guy. Maybe in the future, he'd just send me crypto. For now, payments are only accepted from personal accounts, and PayPal supports Bitcoin, Ethereum, Litecoin, and Bitcoin Cash payments. Cash will be effective on the day they are initiated, but may take 3 to 5 days to transfer, for the transfers to take place. Governor Powell, a member of the U.S. House of Representatives, has been a vocal proponent of cryptocurrencies, said earlier in the year that he expected the state to begin accepting payments for, state taxes in cryptocurrencies. Powell spoke at the opening of Denver Startup Week. And I'm going to just check on my something on my tablet here. Okay. Now, as a state, this is the governor saying this of Colorado, we're on the forefront of digital innovation, whether it's applying blockchain and shared ledger technology as a new model for funding, or whether it's simply being consumer friendly and making sure that we allow for the kind of innovation that will disrupt legacy business practices and government practices to make them more efficient. Other U.S. states have also tried to institute crypto tax. Don't try it. Just do it. What's so hard about it? Ohio was the first to do so, but suspended the service after a year due to legal complications. Of course, there's legal complications. We're talking about the U.S. government. New Hampshire also attempted on multiple occasions to adopt crypto payments, but bills regulating such payments never made it beyond the state legislature. Oh, boy. No surprise there either. Other states like Georgia, Illinois, and Arizona have also considered instituting crypto tax payments. I don't understand why the IRS wouldn't want this. This gives them another way to collect. So it's just stupid to me. Thank you, Jana Serfontine. Thank you for the article. All right, so that's that. Now, back to the news again. Drop your comments. We'll talk about what you want to talk about. There's 25 beautiful people here. We're waiting for the old man to come out of the cave. Perhaps he will see his shadow or not, or raise interest rates 75 basis points or 100, something like that. Or maybe he will see his shadow at the same time. Hump, not dump. Yo. He has suggested that we do the 3 o'clock show. This is a pop-up stream because of Powell. He also suggested that, but we might just go back to doing 3 o'clock for our, well, he's in New York City, but, for the people, he said in Europe, like Maria and people like that. I keep canceling. I got to call Maria. What to expect from Cardano? No one cares. Bitcoin price prediction? I don't even know. Selling physical items. Here's something interesting. Now, this kind of relates to MetaMonkey. How about that? Selling physical items as NFTs explained. Thank you, Cointelegraph.com. Oh, you know what? We will. Okay, yes, we will give you a Luna Classic update, Crypto Bug, just because you asked. After I go through this article, we'll talk about Luna Classic, the beloved Luna Classic. Doquan, my little Doquan, where have you gone? He's hiding. If he comes out today, he's been hiding with Powell in the cave. How is it possible to sell real-world items as NFTs? Well, anything can be tokenized is what it's saying, and it's true. 2, could this help modernize the lucrative world of collectibles? Yes, according to the article, and potentially ramp up safety in the process. Sports memorabilia remains incredibly popular. It is. I have some sports memorabilia still left. Pokemon cards also enjoying something of a renaissance in recent years. NFTs can be used to create digital representations of items that exist in the real world. How cool is that? This can help clamp down on counterfeiting, right? Kind of like what Chili's does, and create a crystal clear record of ownership. Some crypto companies have been established, which even offer custody services for blue chip collectibles, ensuring they're kept in a safe place and in mint condition. While this may sound counterintuitive at first, this can prove especially compelling if you regard memorabilia as an investment opportunity. It can also streamline the process of auctions in secondary markets, like Christie's auctions house and stuff like that. Are there any big brands that are getting involved with physical NFTs? Yes. And that's despite the bear market, which has seen trading volumes cool. More major companies are inevitably going to join in the future. Nike has dominated the rankings. That's one of them there. We don't have to go into reading all this stuff. Ticketmaster is involved with NFTs. What are the safeguards in place to prevent scams? By the way, let's check on the old man here real quick. All right, so back to the old man. Back, Larry. Back. All right, let's see if the elevator music is still playing. It's kind of romantic. Yeah, they're still playing it. All right, so we have to wait. He hasn't come out yet. Maybe he's eating lunch or something, or he's in a fight with a groundhog. I don't know. There's another groundhog in the cave with him. Doing some funky stuff. Stop the press right now. Shan's enlightenment. Thank you so much for being here. 75. I'm not sure what the significance of 75 basis points. That's what he's saying. And will he see his shadow? That's the question. He acts kind of like the groundhog coming out of the cave. I have not seen you here before. Shan's enlightenment. Every morning, 8:15 Eastern Standard Time, stake and crypto. This is a pop-up stream. We're going back to the 3 o'clock show starting tomorrow. I just decided now. And also, we have a show, which is the big show, the Max and Larry show. Tonight, just be Max, 9 p.m. Eastern Standard Time. So there's 3 shows, 8:15 a.m. Eastern, 3 p.m. Eastern Standard Time, and 9 p.m. Eastern Standard Time. So you can't miss us. And if you do watch all 3 shows in one day, it's considered a hat trick, sort of like hockey. So number 4, and we are going to get to Powell whenever he decides to roll out of the cave and talk. What are the safeguards in place to prevent scams? Here it is. It's crucial to ensure that an asset's authenticity, provenance, condition, and ownership rights can be verified, giving buyers confidence in what they're buying. Skip it. What happens if something goes wrong? Typically, disputes will end up going through the courts, but this can have mixed success. Not forever. I think that, crypto will start to self-regulate when it comes to NFTs, but we don't need the courts involved. They're going to want to do it. 6, where are the challenges that face the NFT sector in the future being discussed? Matchroom is hosting a dedicated event to discuss physical assets, NFTs, on September 21st. That's today. The meeting begins 6 p.m. London time. That's 7 p.m. in Berlin and 1 p.m. in New York. They're already talking now. All right. So, with an ever-growing number of blue-chip companies exploring the space, adoption among everyday consumers will continue to skyrocket. That's true. Mataram is determined to ensure that the industry gets off on the right foot with investor protection a number one priority. All right, so we got that. Going back to the comments, Hump Not Dumb, aka Crypto Winter, aka Badir. The biggest problem NFTs are going to face in the future is massive regulation due to money laundering cases. Yeah, it's true. That involve NFTs. Gary, the Gopher Gensler is coming. They're coming for you, Gary. You're coming for us or something like that. But let's just say this. You know, it's interesting. You can have a $2 million NFT and accidentally sell it for, let's say, $2,000. Accidentally sell it. Perhaps it's to yourself. And then you know what it becomes? A tax write-off. So there's very interesting things that you can do. You didn't hear that from me, but there's interesting stuff. There's definitely, there's a lot of crazy stuff going on. But that's going to be the next thing. Here it is. It's kind of like this. Number one, stable coins. Number two, exchanges. And by the way, crypto.com and people like you, KuCoin, well, not KuCoin, you're in South Korea. Crypto.com, they're talking to you. And Coinbase, we don't like you guys either, or we do like you guys. They're going to give us information. And while you're doing the KYC stuff, we need a list. Never mind, just give us a database. We want to be able to track. So when someone has a Crypto.com account, this is the government speaking, we're here to help you. So tell us where all the wallets are. Like what's MetaMask? Oh, okay. We want to know what all the MetaMask accounts are. And, we need their wallet addresses and the trust wallets and all that kind of stuff. Let me see what you got going on there. It's okay. You don't have to tell anybody. We just need the information. So then they're going to be able to track all that. So stable coins, the banks are getting involved. That's what they want. And the credit unions. Okay. So they're going to destroy that. You're going to get a 1%, 2%, 3% return. I'm predicting it here first. No one is saying this but me, or maybe they are, but I don't listen. Number one. Number two, is anyone telling you that they're going to go deeper than just KYC from the exchanges? They're going to want to see where all the money's going to. They want to see all the wallets that's being spread to. That's number two. Number three, they have to find a way. That's why they're going after, they don't really talk about it. They're going after Ethereum. This is the real reason, because they want to figure out a way to control the NFTs. They don't say that, do they? You ever read an article that says the reason why the government's going after Ethereum is because of the NFTs? That's the reason why I believe they're going after them, because they're trying to figure out, this is something that's it's a freaking picture. It's basically digital art at this point. They don't have a lot of utility, but they are going to have utility. So we have to get ahead of this. This is the government speaking again. We're here to help you. We're going to get ahead of it and figure out a way to regulate it. So that's what's happening. Luna Classic is coming down, but the true support is 3021983. Thank you for the update. And let's jump over to Luna Classic ahead of the old man and take a look, because also Crypto Bugs had asked about it earlier. So as promised, let's take a look at what's going on. Luna Classic currently down 4.1%. Have no fear. It's up 221% in the last month, sitting at 30282. Hump Not Dump is saying the true support is at 21983. Okay, so we're not down that far. He says, so people don't panic sell your crypto in September. Not financial advice, but September is buying and DCA time in markets. Every September is like Rectember. Second week of October is better times. Well, if it was like last year, then it would be true. I don't doubt your statement. It would be nice if it was like last year, but I still believe the bull run doesn't start until February 14th, 2023 at 5 p.m. Eastern Standard Time, to be precise. So this is what's going on with Luna Classic. Now, I will Google, just for your benefit, what is going on. Is there any Terra Classic news? Let's see. A little bit easier to do it this way, and I'm sure there's some videos about it. All right, here's one 6 hours ago. Thank you to who? Thank you to analyticsinsight.net. Investing in Terra Luna Classic. We found a better option. Oh, really? Okay. Well, what's the better option? Let's see. It's just jumping around with pop-ups. Why is it doing this? Why can't it let me see the article? Terra Luna and Luna Classic. After the crash, the old Terra Luna token was rebranded to Terra Luna Classic. Yes, we know this. And a new token, Terra Luna, was created and airdropped to former holders. The crash destroyed the Terra ecosystem, which made it nearly impossible for the price to stage a comeback. That is until the Luna price surged, bringing the price of the token from $1.73 to a new high of $7.66. The huge Luna price rise also pulled the Luna Classic price up, with a rising from a low of 3 zeros 44500 to 2 zeros 47246. After 2 days of continuous bullish trends, the Luna token is experiencing a pullback of 9.41. All right, so traders and investors are skeptical about the security of the token and are choosing not to take their chances, but rather cashing in gains and reinvesting in search of security in the bear market. Well, I don't know how they know that, but crypto analysts and investors alike all love the hideaways. What is the hideaways? It's in a difficult environment for us. The term hideaways has focused on making sure that investors feel safe. They've achieved this through solid proof audit. You know what? This is trying to promote something else. We don't want to read about it. I don't know what they're talking about. But anyway, not much going on with Luna Classic ahead of the 1.2% burns. And let's go and check on the old man and see if he's ready to come out. Not yet, but you know what? It's supposed to be out here. Maybe he is out here. He's out. All right, let me just share it properly. Share, stop screen. Hold on, guys. Bear with me so we get the audio up. And here he comes. Let's listen. And I'll give you my reaction as he gets done at some point.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employee employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a 0.5 percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in.
That's it. It's 0.75%. 75 basis points, right?
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when
She's
to
cute.
slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was? Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry.
I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, a rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick.
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that, I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know, you look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings. And you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve. And that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here, given there's some discussion now of overdoing it. What's the incentive to continue front loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it. It's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times. But really, we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future. And indeed, Treasury rates moved up. So we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient? And does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing. where you see declining activity and of all different kinds and housing price increases moving down. So we're having an effect on interest sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening, but you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash. So there's good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward looking and the lags in your policy are forward looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth. And we're seeing that now. So the median forecast, I think this year for among my colleagues and me was 0.2% growth. So that's very slow growth. And then below trend next year, I think the median was 1.2, also well below. So that's a slower, that's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run, but in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment. And the way we do that is by slowing the economy. Hopefully we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability. And I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs. And we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control. And that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions. And you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole from CNN. Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term,
Okay, so it looks like the market has already priced in this as predicted by Badir. Hump not dump. He says, cut this crap off and go to Crypto Bubble. So we're looking at Crypto Bubble's top 100. Everything started pumping. I was watching it. You guys couldn't see it. I was watching on the other screen, and I saw everything starting to move. Bitcoin currently at 19,610, up 2.9%. In the last hour, this is important to note, up 3.2%. So with the comments coming out, you guys could have made some money if you had already factored in, like a lot of people did, this increase. Ethereum up 3.2% also in the last hour. BNB up 3.8% in the last hour. Cardano 4.8%. Solana, these are all hourly, everything up pumping in the last hour when Powell was speaking. Dogecoin up 3.3%. Polkadot 4.7%. Polygon 5.6%. Shiba Inu, where are you? You're up 4.5%. Tron 1.8%. Hex 1.2%. Avalanche 3.9%. Uniswap 5.7%. Cosmos 6.2%. Ethereum Classic up 4.6%. Now let's take a look at what's going on with Luna Classic. Some people were asking about early, including Blue Ricky. Currently, Luna Classic is down, going against what everything else is doing as far as Bitcoin, Ethereum, kind of not following the market right now, but it usually does it these days. 30291, down slightly 0.8%. XRP is about to lose a 0. Let's see what XRP is doing. I mean, man, am I getting remorse? I have no FOMO remorse. It's up 42%, up 1.3% on the day. In the last hour, up 6.7%. It's been pumping. So yeah, that is going to 89 cents is what he thinks XRP is going to. So that's it, guys. I just want to do this pop-up stream. I guess you guys got bored of watching. I would have kept it on and just done my, I just had my protein shake, getting ready for the gym. Tonight, I'm going at 6:45. I'm meeting a friend, and my girlfriend will meet me over there. Whatever. She can just do her thing, and I'm going to do my thing. So thank you so much for being here. We will see you tonight on the Max Show, which is 9 p.m. Eastern Standard Time. And then I'm going to go over to Crypto Talk Now VR with Edward and maybe Hump Not Dump, whoever else is going to be there. And I'll join them for their stream after tonight's Max Show. Thank you so much. We'll see you later.